All right, so we're recording now. So welcome to day 2 of the beginners boot camp. So let's do a quick recap of what we studied or what we learned yesterday. So yesterday we introduced ourselves to the concept of the financial market. You learned about Forex, you learned about crypto. Chidima said, apart from me, I left earlier. Okay, so everybody will get access to the replay. Don't worry, it will be sent to you, right? So you can watch yesterday's session. So we learned about financial markets, what a pip is, what lot size is. You learned about candlesticks. You learned about the trading platform that we use, which is the MetaTrader 5 platform. You learned about the Forex trading sessions, and we placed a trade on the MT5 terminal. So I took you to the 10-trade dashboard, and you created a demo account, a practice account, and then we logged into that account on our MT5 platform. All right, so today I want us to continue from where we left off yesterday. Okay, and today we'll be looking at the market and trying to understand everything that we are seeing on our chart. So I showed you how to get to your charts on your MT5 yesterday. So I want everybody to have your MT5 mobile app open, all right? And just navigate to the charts right now. Go to the charts of GBP USD and then change to the 4-hour time frame. All right, let us do that right now. So let me also do a bit of poll right now because I'm seeing some new faces here. If you already have MetaTrader 5 installed on your phone or on your laptop, type in yes in the chat box. If you've not installed MT5 on your phone or laptop, type in not yet in the chat box. All right, so Chidima has installed it. Who else? All right. Okay, Chico Mary also has installed it. How about Cynthia Donald, David Mark? Okay, so for those that have installed it, okay, so you've already installed it. Interesting. So go to your MT5. You should already be logged into your demo account, right? Go to the chat section, to the chat GBP USD. When you go to the chat section, you see something that looks like what you are seeing on your screen right now. Now, what I want to do today is to have an understanding of this particular market structure, of these candlesticks here. How do we interpret this, and how do we use it to form a bias to trade in the financial market? Remember I said yesterday, 2 major activities that you'll be doing to make money trading in the financial market is what? Buying and selling. And how do you make money buying and selling? You buy at a low price and you sell when the price is high. Okay, that's where you make money buying and selling. All right. When you go and meet a trader, maybe you go to your market, somebody's selling orange outside your house. How does that person make money? He buys from a supplier at a low price. Okay, maybe he buys in bulk and he puts his markup. He buys, it sells to you at a higher price. That's how profit is made. So you also, as a forex trader, we are also traders, but now our own commodity is the currency, it's currencies. So how do you make money? You buy the currency at a low price and you sell at a high price, in a nutshell. So looking at these candlesticks, this is a visual representation of price movement on this particular currency pair called GBP USD. So how do we know the right price we should be buying, and the right price we should be selling. Okay, so that's all we're trying to do today. So everything that we'll do today would give us a perspective of the market, okay, and let you know where you should be buying and where you should be selling. So today we'll be looking at a topic called market structure. Okay. We're looking at market structure today. And under market structure, we'll be looking at two concepts. We'll look at a concept called support. And then we'll look at resistance, support and resistance. And then we'll also look at the concept of trends. So this is market structure. These are concepts under market structure that we'll look at our level right now. All right. So even this is enough for you to have solid grasp of the market. All right. So market structure is simply the structure of the market. It's something that helps us understand the direction of price. And market structure is going to guide you and give you pointers to where you should be buying and where you should be selling. So we look at two concepts tonight. We're going to look at the concept of support and resistance. Also, we're going to look at trends. So let's start from support and resistance, right? So when we deal with support and resistance, I want you to think about reversal zones in the market. Reversal zones in the market. Okay, or you say areas of reversal. I'm going to explain shortly. Take us to the chart and see how all of this play out. All right. Now, when you hear support and resistance, think about reversal areas in the market. Think about reversal zones in the market, areas of reversal. Okay, an area of the market where we see a change in direction. Okay, turning points, right? That is support and resistance. And why are we studying support and resistance? Is because we want to use historical data to predict the future. So support and resistance are areas of reversal that has happened in the past. There are zones in the past whereby price has reversed, where we've seen reversal in price. It has happened in the past. Okay, so we mark out those areas where price has reversed in the past, so that if in the future, if price should come back into that zone, we would also be anticipating a reversal. So that will guide us and let us know if we should buy or sell at those zones. Okay, so that's a bit of a backstory about support and resistance. Now, let's look at it in real time. Now, let's deal with support first. Okay. So what is support? Welcome on board, Chibueze. Welcome on board, Thomas Adamu. So now we have support. A support is an area of the market. Remember, we said support and resistance are reversal zones in the market where price is changing direction. Okay, a support is an area of the market that acts as a floor. So when you hear support, think about something that is on the ground, a floor. Okay, you know, when you throw something, when you throw your pen on the floor, most likely it will not go beyond that floor. And then you see your pen bounce off the floor. Likewise, a support is an area of the market that acts as a floor, so that when price is going down to that level, let me draw this out for you so you see it. Okay. So that you see price going down like so, price coming down from somewhere above. If price gets to an area, you see a swift and a sharp reversal. You can see this change in price direction here. All right. What happened here is that price is reacting to an area of support. This is a reversal. Now, at the point, like I said earlier, at the point where you are drawing your support and resistance, it has happened in the past. So you will see that price actually reversed at this particular zone. So if this particular reversal happened in the past, we are not going to draw it or bring it to a future area here, so that if price should come back into this zone, okay, because price in the past, this zone pushed price up like so. If we are seeing a retracement or a return into that particular zone, based on what happened in the past here, price going up, we can also anticipate an upward movement in price. All right. So that is why in a support zone, that is a zone where we buy. We buy at support, because a support zone is meant to push price up, because it is acting as a floor, as a support. It's meant to push price up. So when we identify a support zone, the next time price gets into that zone, we are looking to buy. Write it down, guys. We buy at support. Okay, a support zone is a zone where we look for buy opportunities. Okay, so please note that support and resistance is not a trading strategy. It is not the only thing you have to look out for before you buy or sell. There are other confirmations you need to wait to align first before you pull the trigger for the buy or sell. But for the purpose of this beginners bootcamp, we are not going to discuss about entries in this beginners bootcamp. We are going to discuss about identifying points of interest where you should be buying or selling. I want you to be able to interpret the market and be able to form a perspective as to where price is going to start picking up from. If you can do that successfully, entries is not that much of a big deal, right? If you can identify zones where price is going to pick up, where price is going to start reversing from, you have done almost 60% of the work. Entries is very, very easy. You just need to wait for a few things to align. That's all. You'd have an entry checklist. Okay? So write it down. We buy at support. All right? Because in the past, the support pushed price up over here. It pushed price up in the past. So if price should come back into that zone, because of what happened in the past, we are also expecting this price to move all the way up. So when price gets back into that support, you start looking for buy opportunities. I hope that makes sense, guys. Drop in a yes in the chat box if you understand that simple explanation. Give me some feedback. This is a workshop, so I want to carry everybody along. This is not a seminar presentation. All right. If you understand that, type in a yes in the chat box. If you don't understand, type in no. Okay. Chikmere understands, Chikma understands, David understands. Who else understands? Okay, Chibis understands, Thomas understands. Perfect, good. So let's move on, guys. Let's move on. All right, we all understand. Awesome. Now, let's talk about resistance in a nutshell. Resistance is just the direct opposite of support. So a resistance is an area of the market. Resistance is an area of the market that acts as a ceiling. So we're going to look at the chart shortly and see how all of these things play out. We are going to identify a support zone and resistance zone. All right. Now, somebody is drawing on my screen. Who's that? So, resistance. A resistance is an area of the market that acts as a ceiling. So, when you look at the chart, you see that you find price coming from a lower place and the price is going up, like so. Price is maintaining that momentum going up. And then suddenly you see a change in direction and it's very visible to the eye. Price is now reversing, right? There's something responsible for reversal of price. Price does not just reverse on its own. There's always something responsible for any move in the market. Okay, if we see a reversal like so, that means a resistance is at work. What is the work of resistance? The work of resistance is to push price down. All right. So, and then all of this has happened in the past. So if you're able to identify a resistance zone in the past, the next time that price gets into this zone, because in the past, this zone pushed price all the way down, next time that price gets here, you'll be interested in what? Selling. Because in the past, price went down from here. So in a resistance is where we sell, right? So we sell at resistance. Okay, we sell at resistance and we buy at support. Okay, so based on our knowledge of buying and selling of currency pairs, you now have an idea as to where you should be buying and where you should be selling. You want to be buying at support and you want to be selling at resistance. Okay. So let's look at the chart and let us identify a support zone and resistance zone together. So we are going to see how the market plays out in a support and resistance area. All right. So looking at this chart, let's both of us start by identifying a support zone and resistance. Okay, so let me show you something. You can see price going up like so, or let's use this. Price coming down here like so, and then suddenly this downward move, you see a sudden reversal to the upside. That means something has to be responsible from here for pushing price all the way up. So over here, there is a support zone here. Support here. Okay. So the question now is, how do you mark out? How do you map out your support zone? Because support and resistance zones, it's not a line. It's not a price. It is a zone. Okay. Now, in this particular scenario, the easiest way to adequately map out a support zone is to map out the bearish candle before the change in direction. If we are looking at how price reversed over here, the bearish candle before the reversal. Hope that makes sense. The bearish candle before the reversal. In this case, this is a bearish candle before the change in direction. So I'm going to highlight this bearish candle. You can use horizontal line to do it, underline here, or you can simply use a rectangle tool. So I like to use a rectangle tool. You can find these tools on your MT5 as well, rectangle tool, to make some drawings on your chart. So I use a rectangle tool to do this. All right, so let me play this back, for example. Okay, so let's say we're able to map out this support zone. Now, because in the past, this area acted as a support, in the future now, if price for any reason should come back into the zone, we will be interested in buying, because in the past, it pushed price up. So in the future, most likely it might also push price up. That's why I said we are using historical data to predict the future. Now we know that history is not 100%, cast in stone. It's not like 100% correct. So there are times that support zones can be broken. A support zone can be invalid. Price can break a support zone. So it's not a certainty that we are always going to see a reversal in a support. But 6 or 7 out of 10 times, it gives us an idea as to the zones where price is interested in retracing. So if you play this forward, let's see how price retraced at that. So you can see price came into the zone. It is inside this zone now that we are going to be interested in buying. When you join the intermediate classes, you are going to learn about entry strategies. You learn about entry strategies. Okay, you learn about how to buy and how to sell. So when price retraces into the support zone or resistance zone, what do you look out for before you start buying? So let's assume that we found a setup, an entry inside the zone. You see how price is going to pick up from this resistance, from this support zone. You can see that price is going all the way up. It's going all the way up. You can see, right? Now, this big move right here is because of this support. So if you are taking entry here, you would have been in very interesting profit. Okay, so your knowledge of support is helping you know the best area you should be buying in the market, so that you can capitalize and make profits. Okay, let us go ahead. So price has done this. All right. So you can also see over here. Let me show you something. So over here as well, you can see price going up like so. Okay, you can see this downward move and then price going up. Okay. Now over here, even though it's not, over here, we have a support zone here. This candle, price went up, and I can see the candle that came down and the price went up. All right. There is a change in direction here. Price going down, and then suddenly it went up. So if you mark The support. Support is the what? Is the bearish candle before the move up. So over here, we have a support zone here. So let's assume that this is what price is doing. And this happened. So the next time the price should retrace into the zone, you'll be interested in buying. Be buying here. All right. You'll be buying here. So let's see what price did. When price retraced into that zone, you can see activity. You can see some activities here. Okay. Ultimately, this support zone was very, very valid. And then if you have bought in this zone, you would have seen price go your direction. All right. Let us continue. Price is still giving us the support. So over here, you can see price came all the way down and then it started going up. That means there's a support here as well. Okay, Ambrose Annie, you're welcome. So over here, you can see how price came down and then started going up. I mean, there's something responsible for price going up here, which is a support. All right, in this case, we can mark out the zone, the last bearish candle before the move up, so that if for any reason price should come back into the zone, we'll be interested in buying over here. So let's see if price got to that level. You can see price came back down into that zone, passed it a bit, but ultimately this zone triggered, okay, the movement of price up here. Okay. That's the importance of understanding support and resistance. Okay. With this downward movement now, we have a newfound support like so. So if for any reason price should retrace into this zone, if price should retrace into this zone, we'll be interested in buying somewhere around here to the upside. Okay, let's see if price has done that yet. Okay, so price has not done that yet. Okay, we already have price giving us a new high. Okay, so check it out. Price came down here, and then suddenly we found price going up like so. So there's a support here. How do we draw the support? The last bearish candle, which is this one. It's the last bearish candle before the change in direction. So if we move this support, right? If you had, before price got there, you'd have something like this. So we've already identified this support zone. So if price should come back into this area, you will be interested in buying inside this zone. So if you play forward, what can we see price? You can see price got into the zone, right? Ultimately, what is price? So price is currently reacting to this support now, right? You would have been in some profit, right? Because price is reacting at this support. So it's a very, very basic concept. Like I said, you just don't buy at support or sell at resistance. When price gets into a support, you need to look for additional confirmations. Those confirmations, we'll talk about it much later in our intermediate lessons. All right. My goal for you in this workshop is to be able to spot points of interest where you are going to be taking entries. All right. Are we together, guys? Are we together? Am I communicating? All right. If it is making sense so far, type in make sense. Type in make sense if you are getting value on this workshop. On this example of the support, if it makes sense, type in make sense. Okay, I need to know that I'm carrying you along, guys. Chidima said, make too much sense. Awesome. Let's go. Good. Thank you, everybody, for responding. Now, let's talk about resistance real quick. Okay. Now, your knowledge of support and resistance, once you can spot it adequately, that is when you now easily be able to read the chart. The chart will now start making sense to you. That's my first order for you. All right. So, and I'm so happy that we have holiday this period. So that means you have ample time to study. All right. Chidima is asking, please, what is a white candlestick? Okay, let me just remove it. That's an indicator I use, but don't worry about that. You learn about it in advanced class. That's something we call an inside bar. You don't need it now, okay? So let's discuss about resistance. All right, a resistance is an area of the market that acts as a ceiling. The work of resistance is to push price all the way down. All right, now let's see how price has been reacting in a resistance area. Okay, you can see price. Let's just pick a random. You can see price going up like so. And then suddenly we can see this reversal here. Okay, what pushed price down? There's something responsible for putting price down. Okay, in this case, this particular scenario, there's a resistance here. All right, am I communicating? So how do you identify resistance? The last, hold on guys, my phones are silent. All right, the last bullish candle before the reversal, before the change in direction, that's how you identify resistance. In this case, I'm concerned about this bullish candle here, from here to here, to this top. All right. I use my rectangle to mark it out. So let's play this right back. So let's assume that this is the current market price. Price is here. And then you are saying that over here, there's a resistance zone here. So you've been interested in, so we already even have some little movements here, all right? Price retracing. So we can have, so we have price reacting at resistance. So we can see price going up from there and then ultimately going down. So we've seen the resistance zone in action already, right? So if price also comes back to that zone, we should also be experiencing this zone to ultimately push price all the way down. Okay, so let's see what price did over here. So let's play it forward. How do we start zone at? So price is inside the zone now, all right? And ultimately, right? Ultimately, this zone pushed price down, even though we had price go beyond the zone a bit. Okay, but ultimately, this zone pushed price down. Okay, so once you start going deep into this concept and talking about entries, you will know exactly what happened here, and you can still take entries in a resistance. All right. So moving on, you can see how price is reacting as resistance. So price has also, you can see price going up from here and then going all the way down. What it means is that there's something responsible here for pushing price down. This, to mark it out, we are going to use the last bullish candle before the bearish move, before the change of direction. So if I mark it out from here to here. So if price should come back into this zone again, I'll be looking for sell opportunities. So let's see what price is going to do over here. All right, so price has not gotten back there. So let's identify zones as it go along. You can see price coming here. Price went up like so, and then you can see this reversal. There's something pushing price down, which is a resistance zone over here. So to do that, to mark that out, the last bullish candle before the change in direction, which is this right here. So when we mark it out, you can see next time that price is coming back into this zone, we'll be interested in selling. Okay, this is a resistance zone. This is also a resistance zone. So we are trying to sell in over here and over here. So let's play it forward and see what price is doing. You can see how price is reacting at those zones. So this resistance zone, okay, this resistance zone was ultimately broken. Like so. So there was a bit of action here actually. So you might have gotten a bit of entry here for little profit. And price coming very close to this resistance here. All right. But based on the peep or based on, you might get triggered. But over here, based on this, we do not, if you are going by this analogy here, we won't have a setup. But price came very, very close. Just how many pips close? Let's see, from here to here. Okay, about 3 pips. 3 pips far away from the resistance zone. But ultimately, all right, we had some bit of action and then price went all the way down. Okay, now this is also an area we can consider resistance. Price went up and then we can see a reversal. So over here, the last bullish candle before the move, we do that resistance. And then what can we say? When price broke out of this zone, like so. So if we see a retracement, if price will come back into this zone, you're willing to sell, right? So if you play this forward, what did price do? Price came into this zone, and then what did we see? You can see price dropping from here. Okay, so you will always see resistance and support in the market. Price moves from an area of support to an area of resistance. From an area of resistance to an area of support. It's like a ping pong. Price will move from support, go to resistance. It will move from resistance, go to support. So price is constantly a movement between support and resistance. And that will guide you as to where you should be looking for entry. Okay, so we can keep going on and on and on and on. The same thing is going to happen. You see how price is reacting at support and resistance. Okay, so a proper understanding of support and resistance will help you know zones or areas of interest where you should be buying or selling. All right, let me know if that makes sense to you. If you want me to come again, let me know. Are we following, guys? Is it making sense to you? Is it making sense? Are you able to, do you have a better understanding of the market? Are you able to properly interpret these reversal areas? All right, making sense. Good, good, good. All right. So now, good. Now, let's talk about the next concept, which is a concept of trends. All right. So when we now understand trend, we're now going to merge our knowledge of trends and our knowledge of support and resistance to arrive at a very important perspective of the market. So you're not able to properly interpret what the market is doing and how you can take advantage of the current market for your entries and exits. Okay, so let's talk about trends. Trends. When we talk about trends, what are we talking about? We are talking about the strength of the market. Yesterday, we made mention of the bull market and the bear market, right? In a bull market is a market when the price of a commodity or the price of a currency pair is increasing. There's strength in that particular currency. It is gaining value, so it is going up. That's a bull market. In that particular scenario, we say that the market is bullish, right? It's a bull market. The market is bullish because price is going up. There's increase in the exchange rates of that particular currency pair. Now, in a bear market, it's the direct opposite. A bear market is a market environment where that currency pair is weak. When there's weakness in that particular currency pair, that means the value of the currency pair is going down, is decreasing. There's a visible weakness. There's a decrement in price. All right. So that brings us to talk about trends. We have two types of trends. Two types of trends. We have what we call the uptrend, and what we call downtrend. Okay. Uptrend and downtrend. So an uptrend is a market environment when we are in a bullish market. Okay. In an uptrend, the market is bullish, and in a downtrend, the market is bearish. So we have a bullish market for uptrend and a bearish market for a downtrend. Simple. Now, why are we talking about trends? What is the importance actually? The importance is simply to know the strength of the market. We want to have understanding of the momentum of price. Okay, because as a retail trader, you want to trade with the momentum that is in the market. If the momentum that is in the market is strength, then you also want to go with the market. You also want to be bullish. If the momentum is bullish, if price is going up, you also want to be on the side of the market. So you also want to go bullish. If the momentum of the market is bearish, you also want to be bearish in your entries and analysis, right? You want to trade with the trend, okay? You want to trade with the trend, right? So this is a conservative way of trading. It will save you a lot of headache. right? Trading with the trend is sustainable. You can sustain it. All right, so let's talk about how do we identify uptrend and downtrend? How do they look like? So let's talk about uptrend real quick. So an uptrend looks like this. So if price is gaining value, if we're in a bullish market, okay, price is not going to be going up in a straight line like this. Okay, price does not go up in a straight line like so. All right. So if price is going to go up, price is going to move in trends. Trends like so. You see price going up like this, like this, like this. So this is how an uptrend looks like. This is zigzag format. You see price going up. For a downtrend, you see price going down. This is how price will go down. See this move. Zigzag format like this. This is how price moves. Okay, and then you're able to see it visibly with the candlesticks. So you see the bull candle and the bear candle forming to give you a direction. When you have more of the bull candles trending up, that's an uptrend. When you have more of the bear candles trending down, that's a downtrend. So let's take this under the microscope and talk about some parts or the anatomy of a trend. Okay, so a trend, so for an uptrend, we have this, we have the move up, all right? And then you have a move down like so. And then you have another move up. So now this first move right here is called impulse. This is an impulse move. This first leg. And this correction here, this retracement here, okay, is called a correction. All right. And then this other move right here is called the impulse move. So a trend is made up of what? Impulse moves, correction, and impulse. A trend is made up of impulse, correction, impulse. So some people are going to call this correction, there's other names for it. You can say retracement, or let's say pullback, whichever one looks your best. But correction is the right term for it. Okay, that's a corrective phase of the market. Price is correcting. All right. So in an uptrend, price might continue creating corrections, then give you a new impulse, correction, no impulse. All right, it's the same thing for the bearish market. If I flip this over now, let me flip it over. How do I flip it? Oops. Invert. Good. You can see. So this is how a downtrend would also look like. Impulse, correction, impulse, correction, impulse, correction. All right. So let's go a bit further into the microscope. Let's look at trend properly. Now, in an uptrend like so, let's focus on this turning point here. All of these turning points. This turning point here. These are turning points in the market. They count for something. They are structural areas in the market. So in an uptrend, we have something called in an uptrend, we have something called over here. This is higher low, HL. Okay. And you have higher high, HH. Higher high like so. Over here, this is higher lows. This is higher high, higher lows. All right. You got the gist, right? So the market, an uptrend is made up of higher highs and higher lows. How do you know that the market wants to continue in an uptrend? The market will keep giving you higher highs. Okay, a higher high is a high that is higher than the previous high. So this higher high, oops, hold on. A higher high is a high that is higher than the previous high, right? Now, this particular higher high is higher than this previous high. So this is a higher high. If price forms a new high now, okay, like so, like this. So this is now a new high. This is now your new higher high. So when price is forming new higher highs, that is a signal that the trend is still an uptrend. Okay, now, like I said, why are we studying trends? We want to know the momentum of the price. So the simple inference that we draw from our understanding is that in an uptrend, you want to trade with the trend. If the trend is going up, you also look for opportunity to move with the up move in the market. So in an uptrend, we buy in an uptrend. Write it down. In an uptrend, we look for buying opportunities in an uptrend. Right? We look for buying opportunities. We buy in an uptrend. It is not recommended for our level as beginners. It is not recommended to sell in an uptrend. You want to look for buying opportunities in an uptrend. Am I communicating, guys? Right? Let's talk about downtrend. Downtrend, what do we have? We have something like this. Okay. Now, in a downtrend, this is your lower high. LH. This is your lower low, LL. Okay. So this is lower low, lower high. You get the gist now, right? Now, how do you know that price wants to continue in a downtrend? The market will keep giving you new lower lows. If you see price creating new lower lows like so, that means the strength of the market is bearish. That means price still wants to continue in that bearish market. Price wants to keep going down. So when you spot that price is in a downtrend, which is a bearish environment, you also want to be trading bearish. And how do you trade bearish? You simply look for selling opportunities. So in a downtrend, you are looking for opportunity to sell that particular currency or commodity, that particular instrument. So what do we do in a downtrend? We sell in a downtrend. Okay, we sell in a downtrend and we buy in an uptrend. It's as simple as that. Okay, I'll take it again. We sell in a downtrend and then we buy in an uptrend. Which now begs the question, if we are able to identify a trend, uptrend or downtrend, at what point in the market are we going to be buying in an uptrend? At what point in the market are we going to be selling in a downtrend? As you can see over here, what is the structure of a downtrend? At what point does price usually goes down in a downtrend? At a lower high, right? At a higher area. So from a higher zone, price will keep dropping. If you look at uptrend, at what point does price start picking up to be going up at a lower area? So now let us merge our little understanding of support and resistance and trends together. And let's arrive at the perspective. Okay, so when we've established that in an uptrend we buy and in a downtrend we sell. The question now is, in an uptrend, where do we buy? And in a downtrend, where do we sell? Okay, in a downtrend, we sell at resistance. So in a downtrend, write it down, guys. That's a key point. In a downtrend, we sell at resistance. So you want to look for a resistance zone and then sell. Okay, downtrend. In an uptrend, and in a downtrend, we sell at resistance. I'll take it again. In an uptrend, we buy at support, and in a downtrend, we sell at resistance. Right? I'm repeating myself consciously so that you don't make a mistake. Okay, so this is what I'm talking about. So let's look at this market scenario here. This is a downtrend, right? We've seen price giving us lower lows, okay? Like so. So if you figure out that price is in a bearish environment, you are just going to be waiting now for price to retrace into an area of resistance. So let's mark this out. So let's say this is a resistance area on that leg. Okay, the most recent resistance zone. Okay, the most recent resistance zone. So let's say this is a resistance zone. You just simply wait for price to retrace into a resistance zone. If price should retrace into a resistance zone, this is a zone where you are looking to pull the trigger for a sell. But like I said earlier, you are not just going to be pulling the trigger for a sell just like that. You are going to be looking for some certain entry confirmations over here. But we're not going to be talking about entry confirmations in the beginners bootcamp because we are not there yet. All right. I don't want to rush us with a lot of information and confuse us. But if you have an idea as to points of entries or points of interest the work is 60% done, right? And that's my goal for you in this particular bootcamp, to be able to study the market, interpret it, read it, and then you know where price is going to react. Okay, that is golden, right? If you can do that adequately, you can build on it, right? And be very, very formidable. All right. Now, so that is how you're going to be trading in a downtrend or in a bearish environment. You wait for price to retrace into resistance, and then you take entry at the resistance. Okay, now let's talk about an uptrend. In an uptrend like so, you can see price in an uptrend, we buy at support in an uptrend. So when you see price doing this, you want to wait for price to retrace to a support. So this will be a support. Okay, so this is a support. So what do? You want to wait for price to retrace in a support. When price gets into the support, I'm looking to pull the trigger for a buy at this zone. And possibly this zone that you buy from will be the new higher low that will push price to form a new higher high, like so. Okay. Do you understand that concept? Buying at support in an uptrend and selling at resistance in a downtrend. If you understand it, type in anything in the chat box this time. Okay, let me know if you understand that perspective. That perspective of buying at support in an uptrend and selling at resistance in a downtrend. Good. Awesome. Chidima said, well understood. Chibers said yes. David Mark understood. Perfect. So next thing we'll do tonight is to now look at the chart and see how price is reacting in a downtrend to a resistance zone, and how price is reacting in an uptrend to a support. Once we've done that, that analysis, that back testing, I'm now going to give us an assignment, okay, an assignment that you are going to do on your own. I must say that you want to do yourself a favor by spending ample time on the charts, right? If you want to learn this thing very, very fast, you need to devote some level of seriousness to it. All right. If you want Forex to pay you seriously, you need to take it seriously, right? Like a serious business. Okay. People making money with Forex, we don't joke with the charts, right? We take it seriously. And anything in life that will make you money, it needs some level of attention. All right. So pay attention to the chart. Spend time on the chart. Let it be your best friend for the next few weeks. This Salah period, I don't know if it's Salah, this Muslim holiday period, at least every day for the next 1 month, next 2 months, spend 1 hour on the charts. You might not spend it at a stretch. Maybe in the morning, do 30 minutes. Before you sleep, do another 30 minutes. Do that daily. Let there be consistency. And then the results will follow. It gets a point whereby the market will just start speaking to you. You won't need to analyze so much before you will probably be able to interpret the market, because subconsciously you've seen how price moves. So you can easily predict or infer as to areas where price will react. All right. So before I start preaching, let us analyze the market. So let's start from an uptrend. So let's see. Okay, so so let us try it. This is a downtrend, as you have seen. So let me try this out. Look at this pair right here. Okay. Let me reiterate something, okay, on the schematic. So this is an uptrend, impulse, correction, impulse. This is an uptrend, right? Okay. Remember, what guarantees an uptrend is a higher high. So price has to create a new high, like so. So once you see price create new highs, like so, you're looking for price to retrace into a support and then you take entry. For a downtrend, what validates a downtrend is what? Price creating lower lows, like so. All right, lower low. So you want price to create a new low. Once price has given you a new low, you want to wait for price to retrace into an area of resistance. You wait for that retracement, and then you strike for a sell here. You strike for a buy here. All right. I'm reiterating on purpose, okay, so that you are following me. So back to this to this market that has taken place. Okay, what can we see here easily? So let me use this a particular example. You can see price doing this. That's giving you impulse move, correction, impulse. So let's assume that all of this has not happened. So this right here, so this is what price is doing. Price has given us a lower low, right? Lower low. Price is in a bearish environment. Okay, so in a bearish environment, what are you looking forward to doing? You're looking forward to map out a resistance zone. So you want to look at the most recent resistance. Just look at it. What is the closest resistance that you can see? Okay, before that lower low. In this case, I can see price going up like this and then coming down. There's a resistance zone here. So what do? I simply map it out. You can see this. So the bullish candle before the move down, it's my resistance. So I take my rectangle to map it out. So now, this is now my point of interest, POI. Okay, my point of interest, I'm looking to take entry here. So I'm now just waiting patiently for price to retrace, into the zone. Once price gets into the zone, I'm looking to sell this guy. Okay, let's see what price will do. So let's play that forward. You can see, look carefully. Price, see as price tapped into it. Let me play this. Check it out. Once price tapped into it, what did we see? We can see that zone, price just going down. So we would have seen an entry here. So you'd have taken entry here, and you can see price going your direction. You would have made interesting profits if you took entry over here. All right. Price has given us a lower low. So that means we are still continuing in that bearish market, in that bearish environment. In a bearish environment like so, what is the most recent resistance? You can see it here, the last bullish candle before the change there. So over here, my interest is here. Okay, so let's see if you play forward, the price will So I'm waiting for price to test that zone. You can see price with testing at that zone, and you can see what price is doing. It's giving you a low. Okay, you can see what price is doing. Price did not go beyond that zone, right? So you would have found an entry here, here, and also here. And ultimately price dumped. Okay, price went all the way down. Hope that makes sense. Still on still, you can see price is giving you a lower low, like so. The market is still bearish. What do you do in a bearish environment? You look for a resistance zone to sell from. All right, so I can take this resistance zone, this one over here. I can take this whole one. You can see this move. Price came up here and suddenly went down. The last bullish candle before the bearish move. If I take it, I'm going to highlight this like so. So let's see what will happen if price retraces into the zone. Okay, what did price do? You can see how price dropped again from this resistance zone. So this happens a lot, guys, in the market. All right, so once you're able to figure out the market structure, you will know where price is going to react. Okay, so that's why if you only pick trends and support resistance, you'll be able to figure out where price is interested in reversing. All right. So let's do an example for a bullish market. Okay, let me find a very, very good scenario. Market. So we have a session. We should be out of 10 to 15 minutes. All right. So my internet connection is a bit slow. Okay. I think I'm back. All right. So let's do a scenario for an uptrend. In an uptrend, we are looking to what? Buy in a support zone. So check out price. So price is in an uptrend like so. You can see price giving us impulse, correction, right? And then impulse. Right, so let me replay this. So we have price doing this. All right. So price has given us this. So we are in an uptrend like so. We are looking for support areas you can buy from. All right. So next thing you'll be doing is to identify areas of support. So over here, I can see that this is a support zone. Okay. This is a support zone. Okay. This is also a support zone here. So now you're interested in buying when price gets to either of these support. These are your points of interest to buy. So let's see what price did and which support zone was respected to push price up. If you play this forward, let's play it forward. You can see. So the first support zone was what the market used. So over here, we would have taken entry here for a buy. If you had bought here, you can see If you bought here, you'd have been in profit. You can see how this zone pushed price all the way up. Okay, so price has given us a new high. So that means we have to find another area of support we can buy from. Okay, so this is a new high, like so. You can see this is the new high. So in this market scenario now, let's find support zones. Okay, this is a support zone. Last bearish candle before the move up. This is the support zone. This as well is a support. So we're going to be looking to take entry here. So you can see price has tapped already into this first support zone here. Price came down. You can see that bullish candle. That is a reaction from this support. Let's play it forward and see ultimately what price did. So price tapped into this overall, this big support here. And what the price do? You can see how price went all the way up. This action was because price retraced into this support. All right. You can see how things are aligning based on the trend and then support. Okay. So that is how you want to look at the market, guys. Okay. So price has given us a new high, like so. So let's find a new, so we have a new high, like so. Okay. So let's find area of support. We have area of support here. We have a support area here. This is a support zone here. Okay. It's also a support zone here. We take this. So let's just use this support. Let's delete this one. So we are looking to take entry in this support zone. This is also another support here, this one. Okay, so we are looking to take entry if price retraces into any of these support zones. So we're looking to take entries somewhere here. So let's see what price, how price is reacting at these support levels. So let's play it forward. You can see what price did. Price picked up from this support here. You can see, and then it created a new high. All right. So this is what's going to be happening to Kingdom Come. All right. So your assignment, guys, between now and tomorrow is to identify uptrends and downtrends, support zones and resistance zones. Are we together, guys? Your assignment. So let's ensure that we do our assignment. You want to identify areas of support and resistance in an uptrend and a downtrend. And you want to study the market and see how price is reacting at a support zone and resistance. Cynthia Donald has a question. So yes, ask a question. Do you want me to unmute you or you want to type your question? Let me just, Cynthia Donald, you can unmute yourself and ask a question, or you can just type. Okay, you can type. Now, our last class is tomorrow, guys. It's tomorrow. What time do we have our session tomorrow? Okay, I'm aware that tomorrow is public holiday. What time can we have our session tomorrow? Should we have it earlier than 6 p.m. tomorrow? Can we do somewhere around afternoon tomorrow so that we can all celebrate properly tomorrow? You know, tomorrow is Friday. Okay, let me have our suggestions in the chat box. What time can we have our session tomorrow? Okay, put in a suitable time for you for tomorrow. Okay. Chibu just said afternoon is fine. I mean, oh, Thomas is traveling to Jos tomorrow. So I guess that's the long journey, right? So you won't be able to make it. David said afternoon. So we have two people saying afternoon. Okay, probably 1 p.m. tomorrow. Okay. Who else has a suggestion? Chidima said afternoon. All right. Cynthia, you asked me a question. In a market of equal lows and equal highs, how do you draw support and resistance? I mean, the approach to draw it very well. Okay, let me try and find equal lows and equal highs. Something like this. Type in a yes or no, Cynthia. Something like this. These are equal low and equal high, right? Yes, okay. It's very, very simple. It's the same approach. If I have something like this, I'm going to be drawing the last bullish candle before the move down. In this case, over here. The last bullish candle before the high. Okay, so this is how I'll draw my resistance in this case. Hope that makes sense. The same concept to draw resistance and support. For resistance, the last bullish candle before the move down. For support, the last bearish candle before the move up. Ambrose Annie is asking a question: which of the session is good to trade? Okay. Yesterday, we talked about the essence of trading sessions, right? Trading sessions is based on when a particular currency is mostly active. There's no good session to trade. It depends on the currency pair that you are trading. All right. For example, if you are trading, if you want to trade the London session and the New York session, you want to trade the currencies of that session, because that's when that currency will be mostly volatile. Which currency do we have in the New York session? We have USD and we have CAD. So if you are trading in the New York session, you want to be trading USD pairs in that session or CAD pairs in that session. Hope that makes sense. Thomas is asking, what is the best currency pair to trade? There is no best currency pair to trade. Okay, you're asking, what is the best currency to pair with? You know what? Let me just draw something here. So let's do trading session real quick. So trading session, we have Sydney. Okay. Sydney, what do we have? Which currencies do we have in Sydney? We have AUD and we have NZD, right? Then we have Tokyo. Which currency do we have in Tokyo? JPY. We have London. Which currencies are active in London session? You have the GBP, you have the CHF, and then you have the Euro. Which currency do you have that's active in New York session? You have the USD, and then you have the CAD. So Ambrose and Thomas, listen up. So if I want to trade, let's say AUD USD, I'll now ask myself, which trading session is the AUD active? That's a Sydney session. Which trading session is the USD active? New York session. That means if I want to trade AUD USD, the best time to trade AUD USD is during the Sydney session and the New York session, because that's when that currency is mostly active. If I'm trading NZD JPY, for example, NZD is what? Sydney session, JPY is Tokyo session. That means the best times to trade NZD JPY is what? The Sydney session and the Tokyo session. Okay, so just use this analogy for every other currency pair. Hope that makes sense, Ambrose and Thomas. Cynthia said, the WhatsApp group you promised to add us last week, I have not been added. Don't worry, you'll be added for this particular session. Guys, please do me a favor right now. Like I said, for us that are online, you need to have your accounts funded. Naturally, to access this webinar, this workshop, it requires that you have your account funded with minimum $100. Now, we need to continue this conversation for everybody because you cannot learn Forex under 3 days and then you are just on your own. If you truly want to learn Forex, you cannot stop at these 3 days. So I want to add everybody that is committed into a separate WhatsApp group, such that you're going to have access to ongoing education, ongoing mentorship, all right? And all that's required for you to get access to that WhatsApp group is to have a funded account. You want to fund your account, right? So if you funded your account, you will have access to that particular WhatsApp group. So please do me a favor right now, right? If you want to fund your account to get access to that group, right? Drop your WhatsApp number on the chat box right now. And then you are going to be contacted and then we'll add you to the group, right? It's not by force to add you to the group. If you want to be added to the group, you are committing to fund your account so that you can be added to the group. Type in your WhatsApp number in the chat box right now, and then we're going to contact you and add you to the group. Okay, Cynthia, thank you for doing that. David is asking a question. My battery is down. Can you? Yes, it will be uploaded to YouTube as well. Thomas dropped his number. Good. All right. So for people that want to watch the replay, you get the replay. All right. David Mark drop number. Okay. Chidima, your account is funded already. Perfect. All right. So you are going to be contacted. So we are going to add you to the group today or tomorrow. All right. So that we can continue this conversation. So I have 4 people here that want to fund their accounts and be added to the group. All right. Perfect. So be on the lookout for one of our account officers to give you a call. Okay. And then when they call you, please respond to them nicely as you can. Okay. We are trying to help you and put you on here. All right. Chibueze, don't worry. To get the replay of this class, it will be sent into the group. All right, so just be on the lookout. Between now and tomorrow, Saturday, to be sent to be uploaded to YouTube, and then you get updated. All right, so our class tomorrow, I have 2 people or 3 people say in the afternoon. So let us, Chidima, don't worry, you get everything, okay? Get everything, okay? So our class tomorrow, I have 3 people say in the afternoon. and they say 1 p.m. All right. So I'm taking the vote for the last time. Is 1 p.m. okay for everybody? If it is okay for you, type in yes. Because tomorrow's class is very, very important. We've saved the best for the last. If 1 p.m. tomorrow is okay for you, type in yes in the chat box. Okay, it's okay for Chidima, it's okay for Chibueze. Who else? Ambrose said 2 p.m. It is okay for David Mark. Who else? All right, so Ambrose, the 1 p.m. is happy to. All right, so this is a poll. All right, so Ambrose, try your best to join us 1 p.m. tomorrow. So the so the link will be sent on the group. So you just register by 1 p.m. and then you register with the link, and then I'll be here waiting for everybody. Okay, so I want to thank everybody for being a part of this session. If you have any questions, bring your questions to tomorrow's class, and then I'll answer your question. Guys, but ensure that you don't miss tomorrow's class, okay? Very, very important class. All right. Chidima said, thank you, we love you. I love you guys too. Chibueze said, I really appreciate you a lot. Thank you. Thank you, Chibueze. All right. So guys, let's have a remarkable evening. I'll see you in tomorrow's session. Good night, everybody. God bless you.